Great. All right, let's jump into it.
Okay.
So I've been actually been looking at gold. I just want to start from scratch. That's why I deleted everything, right? So I've been staying away from it from a bit, especially because of one of two reasons actually. One being the fact that we've actually you know been somewhere around here. We were having a good run on gold. Honestly, I don't want to lie to you. Remember, I think if you watched our YouTube vids, you'd realize that I did have this range marked up, right? I did have this range marked up. Basically, just because we had some of these highs and lows which were price were correcting, also high, low, high and low price correcting, respecting, high and low. Obviously, indications corrections. If you look at this previous one over here, right? Price give us a indication, came back to correct, still respected the high lows created by that range, which was also correcting from a previous range. If you look at things, right? So indication correction, still respecting the previous one also over here. You see, so that's how you can be able to mark these ranges, right? You want a range is practically a place where price had come and corrected. You get what I'm saying? So if price comes and correct this and moves away and breaks above this new high, then this was a valid range. Is this eventually, right? This was a previous range over here. So basically, you did have a previous range, right? So with that previous range, now it's time for a new range, which would be this one. So the low would move to this. So this one is no longer valid. It can be maybe a target for this low can be a target for in the future. If you're going to the downside, if you're using the SIME model. So basically, what we have on the House University, we have three entry models. We just introduced the fourth one as also one of the confluences that we do have in terms of entries, because I do prioritize in terms of whenever it comes to the entries on ICC. One of the entries that we do have is the market structure correlation. Some of you are familiar with it. What do you want to see? You want to see price gives an indication correction, but the internal structure would be something that you want to focus on as prices, is busy giving you that correction. Obviously internal structure might be lower lows, lower highs, and then price to come above the indication line, making the same structure that it is making on the higher time frame. So basically, what that means that where you got the indication from above the indication line, as price is looking to is making those higher highs and higher lows, right? So you have a higher high above at this area, right? You have a higher high on the higher time frame. So basically, also price would become to create the higher low. You know, this would be a higher low in this instance. So price breaking above here should be also be doing the same thing even on a smaller time frame, which should be also a higher high as you can see, and also a higher low, right? A higher high and a higher low above this area. So I'm staking them up because they should also correct each other, especially if this is going to be happening on the higher time frame, being the 4 hour and the 1 hour, and this happening on the 15 minutes. Even if this is happening on the 15 minutes, this can be happening on the 5 minutes, where price will be giving you higher highs and higher lows. Also, where price had broken above, came and retest that previous one, and it makes it valid because the range also what happens on the higher time frame should also be happening on a smaller time frame. So this is one of the entry models that we do have, which would be the market structure correlation entry. This market structure on a small time frame is correlating with the one on a higher time frame. Basically, the risk to reward to this one is 1:3. That's the maximum you can go for. If you want to leave a runner, that's up to you, probably to this high over here, which is much more realistic. But honestly, I just recommend getting a 1:3 R. Whatever you risk $100, you need to make $300 off of that trade, right? That's the first one. The second one that we do have obviously is the side, and I call it the side entry model. That's what side, also said. The previous higher low, that's just below the higher low that price created. That's where your stop loss would be. I only have one issue with this model is that in most cases, price would not do as you think it will do. What do I mean by that? What price would do in most cases, price would definitely, break above, you get into an entry, something like this, right? And then only for price to come back to create a new higher low, and only for it to move on to the next, to this. So most people end up getting caught in these moments a lot of times, because now they're looking at structure probably from a lower time frame. Yeah, probably most of the time like the 1 hour, and in most cases also they end up getting caught because what is this the entry on itself, right? And they're not realizing the range, because you will get caught the first time and also end up getting caught the second time, because price might even do something like this the second time, right? You like, oh, price is correcting, like, okay, now we have a break of structure to the downside, or market start shift to the downside. I'm going for price to do this and continue to go to the outside. Now you get caught two times, because now you sold the first time. You bought the first time, got caught, right? Now you're like, okay, now we have an indication to the downside. I'm gonna buy and I'm gonna sell now, right? This looks delicious. Now you sell, you get caught a second time, only not realizing that we were still bullish based off this range. As long as we don't break these previous higher lows or these higher highs, this range here is still valid. And as long as price is still within the internal range, there has nothing to do with what is happening on the outside. So price on the higher time frame will still push the internal range to where it has to go, unless we break the lows, of that, and then we can have a change of of character, or change of direction, or market start shift on a higher time frame, and then you know where to take price to the next time. But overall, that's the second entry model um, that we do. We all know on the based of how ICC was introduced by SAI. So that would be the second entry model. And then we have the third one being the 1:1. Basically, these are highly recommended using it on the 15 and the 1 hour, which means where the indication came from, this, right? Where the indication came from. Soon as price gives you an indication, right? Price goes and gives you an indication. You can have this model just right here. You can have your entry just right here where price broke above the previous ones. So this is usually a 1:1. You usually get a 1:1 on this method. I highly recommend this on the 4 hour. It can happen. It will happen, yes, but it's, yeah, man, you can wait weeks and days, for one trade just to pan out. So it's not kind of realistic for me in that manner, right? But your win rate will still be, in most cases, like 80-90% win rate. But you will have to wait some time just to double what you risk on the trade, right? And most people, they like, oh, but the 1:1 is not that much. What I'm gonna do, bro, like 5 trades of flipping your $100 account using 100 1:1, like start to flip the $100 is $200. Now you flip the 200 to $400. 5 trades down the line, you already made like 1:32. So highly recommendable on a 1 hour, or also on the 15 minutes, because you can get indications from the 1 hour, the 15 minutes, and then the 4 hour, right? That's where you get the indications. Those are the trends, where you get trends, basically indications and corrections, trends, right? So that out of the way, we have the fourth one, but that one is it's reserved only for the Hasi University. We actually get a trade before, and it's a guaranteed 1:2 R. So the SI model is between 1:1 and a 1:2 R. In some instances, it might go just above 1:2, but it's mostly 1:1 and 1:2 R what you're gonna be aiming for. Right. So back to what I was talking about. We had this indication to the upside. Price came to correct. I said this one here I didn't trust. The reason being, internally on this 4 hour range, internally we did have price make these relative equal highs over here, where price ended up giving an indication above those highs over here. We actually caught this on ICC University. Early January, price came to correct, and then we had a market structure shift happening also at this area over here. Yeah, on the 15 minute, we had an entry of the market structure correlation on the 15 minute. As you can see, price did come, price making lower lows, lower low, lower high to the downside, lower low, price broke this lower high over here. As you can see, price broke this lower high over here, and from there, price started to move to the upside. As you can see, price would then push up to the upside, obviously coming to also, like it almost came to tap this, but then as you can see, price was moving to the upside. So we eventually, use that also to get into that entry. So pretty much that's where we were able to get this market shift entry, and we're able to take price to the upside. Even with the 15 minutes, you can see price was also making those indications as price is going to the upside, right? So back to what is currently happening at the moment on the 4 hour. I'll go back to the 4 hour again. So I didn't really consider this, like I said, you know, I really didn't consider this one. But if you did, it's still fine, right? If you did this as consider this as a correction, it's still fine. So I'm just going to do everything as the correction of this previous size still fine. That would mean that when price fell, because price would have made an indication above this, right? Because price didn't, as you can see, once it made an indication above this, it never came to correct, right? Above this size, right? So that would be, this would be the new range, and then price never came to correct until it came where it broke below these higher lows, right? This is how it looks on the right? It broke below, then this should have been a market structure shift, right? So now we are all caught up, right? So all we, like I always say, the low and the high of the range will still be applicable, right? So with the market structure shift happening on the 4 hour, that would mean the price has room to correct between this low and this high over here, which, by the way, price did do that if you consider this as a market structure shift area, right? So we have a new indication to the downside. As you can see, price corrected to this area. So price has room to correct where it broke to where the indication came from. So this area is where price would have room to correct to. So price did that, and then it sold off, right? It's fine. So now we had price also again give us a new indication, right? Remember the first time we had a market structure shift, right? We had a market structure shift, and now the second time we had break of structure. You get what I'm saying? So with break of structure now, price has now room to correct to the new range, because this range was broken, was completed with an indication, correction, and then a new indication. Now the correction moves to this area where price can have room to correct in between those areas over there on the 4 hour. Even if you to, like look at things from, the reason I like to use these what is this, these ranges, because they can give you some bit of clarity in not taking just any trade, like jumping in without, having a clear understanding what prices do. So if you can just, practice this also on your chart, it will be very good for you, right? So we have price that can correct between this area and this area. So now we see price correcting, it went to correct, but now price is coming to the downside. So you see some of the flaws that the sell entry model has. You cannot sell price from this area over here. Stop loss at the area. You cannot sell price when it's sold to the downside over here, because this doesn't make sense. Look at where your risk to reward would be. Just to get a 1:1 would be at this area. Just for a 1:1. You get what I'm saying? That's the flaw of the side entry model, especially when you're using ranges. You need to understand, right? So you can start from the 4 hour and drop to the 1 hour just to understand what price is doing. Because if you would have done that, especially with this being the indication and price being bullish there, maybe you would have waited for it, tracking it with the ranges, and then until it broke these higher lows over here, where price also made a market size shift in the 1 hour, and then went up to create the lower high. But you would have got caught here also many times, because that's one of the flaws of the the one that I just mentioned, the one I was showing you, the assign model entry method, because you would have sold price when it got below the indication line, and then you would have got caught because your stop loss would have just been about this lower high. You would have got caught, and then price would have just went up, and then now you second guessing your entries now, so this one, most likely, if you would have maybe believed that price would sell, you would have maybe sold. But I don't think you would have believed, because most of you guys, you don't want to think for yourselves, and you following everything that is being said online. And size said around this area price was bullish. Everybody who bought around 5,110 would be bullish. So you would got caught also again. So you would have bought here because size said you should buy. So you would have bought here without realizing what price is doing, where you would have got taken out. You get what I'm saying? Right. So with that being said, we have price breaking to the downside. So with the 1 hour, so like I said, the 1 hour, which is the internal range, price, if price has to maybe let's say go back and correct, price would probably go back and correct this low over here, because that's where price sort of gave an indication on the 1 hour, where it actually eventually became an indication also on the 4 hour, giving us a break of structure. We had a megastar shift. Remember megastar shift or a change of character or market structure, market break structure, whatever, or break market structure, whatever. BMS, MBS, MSS, yeah, that's or change of character is responsible for the change of the direction of the trend. Now we bearish or we bullish, whatever. But in this case, we bearish. Now we bearish. Gold is now bearish. It's officially bearish, right? So pretty much for me, I used the low. I didn't wanna get too much into this. I just wanted to see this previous range low being taken out. So for me, this is where my market structure eventually happened, because like I said, I didn't believe much on this because it didn't correct the internal ones. Only for price, when it was correcting, it came to correct these internal ones and eventually broke these ones over here. But that's the story for another day. Still not a problem. So with that being said, what I would eventually love to see at this moment, as you can see, when we drop down to the 1 hour, we do have a range on the 1 hour, right? We had this price make a lower low, lower high. Eventually, it didn't go back up, but we have a lower low, lower high, right? So we all know this low over here, this lower low is for both the 1 hour and the 4 hour. So we have a lower low on both the 1 hour and the 4 hour being the indication. It's not a problem. So one of the things that I would definitely want to see, honestly, is this. We have a break of structure here from this previous lower lows on the 1 hour. Price made a break of structure to the downside, also giving that indication below this area, right? So if price was to go back there, it would have went back, but it's not looking to go back there, right? At the moment, right? We have this lower highs, price gives an indication, goes back, taps, and comes back and go back and corrects this area, right? So now we know that okay, we have a lower high over here, right? This being the lower high. If price is to break this lower high, we definitely know that where price is going, price will be going to correct this range where it left on the 1 hour, right? So that's how we can be able to track these things, right? So now currently, ideally what I would want to see based on what price is doing now, because we have a break of structure to the downside, right? So as you can see, this is where the SIM model would have been top notch, right? So anything below, you sell, stop loss above the lower high created by price and eventually selling price to this area. There you go, 1 is to 2.8, right? So this would be the trade, probably even the 1 is to, whatever the case may be. This would be the trade, ideal trade in terms of how you're going to be taking it to the downside. But for me, I'm not going to be looking to take it. I'm just going to be marking it at the moment. I'm not looking to take it and at the moment, let's say this is a lower high created. Let's say now, the internal range, lower high created, right? So this is one of the entries. The 15-minute also, we do have price making lower lows, but ideally I would want to see it break these. I mean, come back, correct this lower high over here on the 15. I mean, this lower low over here, because lower low, lower high price sold to the downside gave an indication also on the 15-minute. And by the way, we are below the 1 hour indication and also the 4 hour indication. So bear that in mind. So we might just be going to the downside. So ideally, I would want to see maybe like just if you're gonna be looking to take a trade, maybe just wait for price to just tap here and then probably pull back, right? So tap here and you can probably have an entry above, side model, stop loss above the lower high created, and just like I just showed you, to the downside, or you can use the market structure correlation and then have a stop loss just above these lower highs on the 15-minute, and then still look to take place to the downside, which would be just over 1 is to 5. But if that's what you're gonna be looking for, but ideally, like I said, I highly recommend a 1:3. We don't know what price might do. Price might just come to this imbalance, whatever, react off of some of other block, whatever the case may be, and go back up. You get what I'm saying? So ideally, that's what I wanna probably would wanna see if I was to take a trade on gold at the moment. But now, ideally, what I wanna see is for price actually do what it's doing now, right? I would actually want to see it sell. Like honestly, I definitely want to see it sell. Reason being, should price sell, right? Should price sell to the downside and give us an indication? This would be an indication, or not only on the 4 hour, but also on the 1 hour, right? So remember, we have this indication on the 4 hour. We broke the broker structure. So if prices will break this low, now this gives me a new range where I can look up to. This lower high that is just now being created, this lower high that was just being created now, this would be the range, because price broke below, went up to correct up until this level and broke below. So if price breaks below, this would be the new range. So I would be definitely be looking to sell, because now the range is no longer this spacious. It's no longer that big, because it went from this big to being this big. You get what I'm saying? So if we, like, let's say we're tracking, the range, look at this, like 10,000 pips. Crazy business. You get what I'm saying? Like, also look at this. Still the same thing. 10,000 pips. This is 10,600, just 10,050. You see? So that's diabolical, bro. Like, I don't want to see that. So this would be something ideal that we want to see. Right? Yeah, 5,000 pips, 500 points. Something that it is very ideal, right? So I would want to see price give us an indication, and going to the downside, go back and correct. You get what I'm saying? Then obviously we know we're going to do the downside. And also on the daily, we did have something. Don't know if I'm not sure if I showed you guys. So on the daily, we had a level where price left the sometime last year when it started to have that bullish run. We left this high, and price never came to correct. So left, so that means on the daily, price gave a new indication to the upside. All of this move that we've been trading has been an indication on the daily. So now price is looking to do what? It's looking to come and collect and then move away, probably. That's some of the things that we might see price do. Reason being, we had this lower high over here, right? This not lower high, this higher low. Sorry about that. This higher low. Price made a high, made a low. Price given indication, came back to correct. Price made a new indication, came back to correct. You see, this now have a consecutive range, so we can definitely know that price is coming back on the daily to this range over here. So we're coming back to 3,500. That's the figure. 3,500. 3,500, guys. That's where we're coming to. That's the round figure, psychological, number. Those who know, they know. But yeah, pretty much that's what we're looking to do. Looking to see happen. So ideally for me, I would definitely want to wait for that indication to the downside and price to go back and correct and look to take price to the downside. But I do have confluence, like I said, we do have a confluence for a trade on this. So if that one is already hit and the trade is in profit, by the way, but I didn't take it. But based on what I'm trying to see, is those are some of the things that for me are just gonna be playing the waiting game, and see what price eventually does. And then obviously need to take price to the downside, because now we are bearish. I do have understanding that we definitely fully bearish based on what price has been doing, right? So pretty much, so like I said, that's what I would wanna see. But if you wanna get into bias, I'm not discouraging. Like I said, um, we're below the 4 hour and the 1 hour indication at the moment. So price would definitely probably look to go back up, to this area. Maybe you can look to take those buys. I mean those sales or those shorts from those level, and then look to target this area over here. Stop loss just above the lower highs, and then go to the downside. So some one thing that you can use. So even if you were to taking the 1:1 model would have worked because price would have came and then stop loss would have been above the lower high. So this is what the 1:1 model looks like. So if you were to take it here, it would have been a 1:1.5, and 1:1 would be just about this level over here, right? So yeah, pretty much this is how it looks trading a 1:1 on the 1 hour. But pretty much TP, if you were looking to aim for this, indication lows, this your trade would be in profit. So why not? This is for those people who are always busy working, don't have time too much time for being on the charts. Soon as price gives an indication, something like this, let's say price gives an indication, something like this, you immediately set a sell limit, like sell limit, let's say sell limit, and then stop loss would just be above, once let's say you already calculated your risk and so forth, right? Stop loss, like I said, stop loss would just be above. Let's say you're risking, just for argument's sake, right? Let's say you're risking 6,700, right? You should be able to make your 6,700 again, right? 6,000, yeah, that would be a honest to one, where honest to one would be. But if you were aiming for these lows over here, would be something like this, right? So that would mean this would have been your trade overall as price it was playing, um, just from understanding, what price does and does not. And by the time you're busy, man, just focusing on your thing, So this is how like some of these big YouTube traders they would, So you would be in profit by the way, right? So just to give you, some context in terms of, what to look for on gold, right? So pretty much that's just about it. Do you have any questions, guys, before we wrap up?
Um, no, I mean it sounds good. It sounds like you broke everything down pretty well. At first you were lagging, but it started to clear up, so I started to understand a lot more. But yeah, I mean, for now, I mean, you gave me a hell of a good breakdown of everything, so it sounds good to me.
All right, bro. What about you, bro? What do you think?
Like I said, every time you come to break it down, things makes it more understandable and more easy to understand on what's really going on. So, I mean, yeah, I like the explanation every time that you teach.
All right, thanks, bro. Thanks, bro.
I
Um,
will ask though,
uh-huh.
I will ask for, let's say, um, it breaks that lower high it just made that you have marked out. Will that, would you enter into a buy there? No, no, not that one, just the other one under that one.
This one.
Yeah, that one. Would you enter into a buy and aim for that other lower high, or would you just kind of let it freely ride and wait until it actually starts making um more lower highs? Or like what's your mindset behind that if it does break that lower high, the most recent one?
All right, so that's the flow I was talking about the side model, the side entry model that I was telling you about. The side entry model tells us to have our stop loss above the lower high created as price was correcting into, and as price goes to the thousand. This is the dream setup on ICC, right? This is the dream setup. Stop loss
Hmm.
above the lower highs, obviously, and you buying price below the indication line, right? Um, your buying price below the indication line over here, right? We have the indication, price
Hmm.
goes correct, gives a lower high, you market, price breaks below, you sell it, right? So you sell price below the indication line over here. So dream setup. But like I said, it's not always the case where something like this would happen. So understanding a range, that's where things comes into like the clarity comes into play, right? So the 1 hour has internal structures like the 15 minute, whatever the case may be. You get what I'm saying? So without that understanding that okay, we did have a low, we have a high, this is the range, right? Price broke below this over here, and it came to correct this. Should price continue and we only gonna have a new continuation to a downside once we break this lower low, and we're gonna have a market structure shift once we break this lower high. not internal. Internally will be a different thing where you also have to treat it the very same way you treat the higher time frame being the 1 hour in this instance. So that means your 15 minute will be your internal. You get what I'm saying? So should price in just like
Mhm.
what you're saying, should price go up and take out this high
Mhm.
without taking out this high, we still very much bearish on the 1 hour.
Okay,
You
I
understand?
get you.
Yeah. So
You're
price
still in
can come.
range, so it hasn't reversed.
Yes, it hasn't reversed. Price can go back up, take out this high, and then sell off.
Mhm.
You get what I'm saying? Take out this high, but it's still
Yeah, I
within
got you.
this range over here. Because this high
Mhm.
should be able to protect price to push it back down. You get what I'm saying?
Mhm.
Yeah. So I
Okay,
will,
I
yeah.
got you.
Let's say somebody sold here for just for argument's sake, right? Somebody sold there, maybe like stop loss maybe like just above here, right? They had a good run, honestly, right? They had a good run. Price looked like it was going there. We like, oh, tapped and then whatever argument you know how people can be sometimes. They will come to with
Mhm.
anything, we always trying to fit our, you know, our ideas into the market, but we don't study what the market is showing us. We're trying to fit our, what we think, on the market. As soon as price starts to reject, it's like, oh man, this thing is selling immediately. So he sells, right? They're like, oh man, it's been selling and it hasn't been giving setup. Let me just sell because now your blood is aching for that trade. You need to go get the trade, right? So what does price do? Takes you out. Now the the mindset changes immediately. Oh man, we have a market structure shift, right? We have a market structure shift, price is going up, right? This is the new indication. All right, price is gonna come back down, and I'm gonna, this is, the lower, the higher low created, right? The market structure shift, the new high over here, higher high, price came back. Soon as price does this, what I was still showing you. Soon as price comes, they say comes here and then sells off. What do you think they would have done? They would be buying stop loss below, and then they get what caught without realizing this range over here. You get what I'm saying? So that's where most people end up
Mhm.
getting caught in most things because they end up being on the wrong side of the market. So as long as
Mhm.
your range is still intact, my brother, I'm telling you, like, bro, no matter what price does, I'll just give you, maybe you can screenshot this. Let me just start from right. Mm, price corrects, indication, price doesn't correct. But on a smaller time frame, it does this. You can still trade it because it's doing this inner internal of this higher time frame, right? Price comes, it this now internally becomes bearish, but this stays bullish. You get the concept?
Did you ask me a question? You cut out.
Yeah. Do you get the concept like of it?
Ask it again. I don't know what you said. You just
Okay.
kind of you cut out a lot.
Price price goes up, indication comes on correct.
Okay.
Let's say 4 hour, right?
Mhm.
Price goes up
Mhm.
again, gives an indication, doesn't correct, but then it makes a higher low, it makes a high on the same time frame.
Mhm.
This here, soon as price breaks this, are we bearish or are we bullish? Based on how you've been understanding price.
We're still bullish because it hasn't broken range, right?
Yes, from what I'm showing you, you're still bullish because why? The new range is now has moved to this.
Yeah.
Yeah.
It
So
just hasn't
whatever
corrected
it,
fully.
even if on the same time frame, it shows the same. It shows like something like this. Like just consider this the indication because price didn't come and correct this. Price still needs to come and correct this. So this is part of the internal. So you
Mm.
can go to a smaller time frame. Probably let's say all of this is happening on maybe let's say the 1 hour. Right? It's showing it's happening on the 4 hour. Yes, on a but it still left this. This you can trade on the 1 hour. You can go to 1 hour find the indication correction, and then look for entries, take price to the upside. But you have to be very careful. You don't aim for something that you don't see. You wanna probably aim for these highs over here, and then get those maybe market structure correlation
Mm-hmm.
entries or whatever the case may be. Because in most cases you'll find price doing this, right? So like it always does
Mm-hmm.
in most cases, like you know, where remember what I just showed you earlier, right? We had an indication, price did what? You see, indication, price did what? Print the structure, right? This doesn't mean this structure is not tradable. It is tradable because there are instances where price would make a high, come and correct and push back, continue to push up. You get what I'm saying?
Mm-hmm.
Yes. And same with this one. That doesn't mean it was not, tradable. It was tradable. I will show you, right? This is what's happening on the 4 hour. We know this is supposed to come and correct. So if you go down to the 1 hour, you'd realize there was structure that was being built. Price is correcting on the 4 hour, yes, but the 1 hour is now becoming bearish, right? So lower low, lower high, price comes and corrects, right? Sells off.
Mm-hmm.
Lower low, lower low, lower high, indication correction, lower low, lower high. You get what I'm saying?
Mm-hmm.
Yeah. But without leaving that thing, that vision that, oh, we had that indication, all of these movies indication this has been the correction. As soon as price taps into this previous range on the 4 hour, as you can see, like I said, I considered this one over here, right? I didn't consider this because it didn't correct the internal. As soon as price hit this, what did we have? Price then started to break the lower highs. The lower high taking out higher, high,
Mm-hmm.
higher low. You see? That doesn't mean it
Yeah.
cannot be traded high, high, higher low, right? Price has been doing this, bro. See, high, 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 low. You see, still holding. The low still holding. Below breaks, but then obviously this previous one also was still holding. All of these things, and then price reverse again, push to the upside again. You get what I'm saying?
Yeah.
Yeah.
I
So
understand.
all of these things is just so you can get an understanding what price does. Start ideally start with the 4 hour. Ideally start with the 4 hour. Get a understanding, get a clear view what price is doing. Just look for areas where price corrected. Even if you're on the 1 hour, look for areas where price corrected. Like price sold, made a low, lower, corrected that area, and then you can walk something off of that, right? I mean, look at this low, lower, high, lower, low, price. You see, lower, high, it's sold off, right? But you also want to differentiate between the internal of that time frame and the actual move of that time frame. Because look at, let's say, it will differ in most cases because you can have an internal being like very big, um you know the internal being too much, too many things happening, and can have like the external being a very big movement. Like for instance, we did have an indication above it, right? Price broke above, made a high. That means this low over here would be where price would be looking to come and correct between this high and this low. Price came, created a higher low. So now you understand this is a higher low on the 1 hour, right? This is a higher low on the 1 hour, right? But look at the internal that's happening. You see? So this
Yeah.
was on a internal structure on the 1 hour of the 1 hour, right? We have a new indication, price gives an indication, price goes up, right? Price goes up, comes
Mm-hmm.
correct, give us a low, that does what? Same thing. Indication breaks the previous high lows. Now we start to become bearish. Immediately from there, market start shift lower low, lower high to the downside. And that's when we started to see the fall. There's a
Okay.
lot to learn, man. There's a lot to learn. One on ones, bro. One on ones. You know, having those one on ones be crazy.
Okay. Yeah, I'll definitely look into it.